Often when it comes to dividend investing, there are those that prefer higher income and those that prefer dividend growth. It tends to coincide with one's investing time horizon. Those with a long time horizon tend to prefer dividend growth. However, those stocks have lower yields but offer higher growth potential, both in the form of dividend growth and share price appreciation. Also, those stocks are much more volatile. On the other side, high income stocks or high dividend yield stocks tend to be more mature but also offer less growth potential. Now, this is not always the case. Often on this channel, I talk a lot about dividend growth stocks, as that is my preferred type of dividend stock. Although I own both high yield stocks and dividend growth stocks and some moderate dividend stocks as well, dividend growth is my main focus given my time horizon. However, on today's video, we are going to focus on high yield dividend stocks, those looking for income. And we will be talking about 3 high yield dividend stocks to keep high on your watch list for 2023. With that being said, if you could do me a huge favor and click that like button down below, that is huge for the growth of this channel, and I truly do appreciate it. With that being said, let's jump into the video. Hey everyone, Mark Rusin here. I'm a CPA and not a financial advisor. So everything shared in this video is for educational and informational purposes only. And before we take a look at our high yield dividend stocks today, here's a quick word from today's sponsor. Today's video is sponsored by Southern New Hampshire University. In today's fast-paced environment that we live in and skyrocketing education costs, the idea of finishing or just going to college seems both unrealistic and far too expensive. After all, we are seeing students go to school and then end up drowning in debt for a number of years. However, this is where Southern New Hampshire University, or SNHU, comes in. SNHU is one of the largest accredited nonprofit universities with online courses in the nation. They are radically affordable, and their online tuition rates are among some of the lowest in the nation. No longer does a lack of experience or degree need to hold you back in your career. You can gain that from SNHU at an affordable cost. Right now, if you go to snhu.edu/Mark, you can see what the current average annual salary is for a number of different programs they offer. Go check out SNHU today. Now let's take a look at the 3 high yield stocks we're going to cover today. And all of these have a yield over 5%. The first high yield dividend stock we're going to talk about today happens to be a REIT, and it is Boston Properties, stock ticker BXP. Boston Properties is an office REIT, and I know that may frighten a lot of folks right now because there's a lot of people working from home, and frankly, there's not a lot of tenants that need as much office space as they once did. But the ones that still do need office space, they are looking for high quality office space, and that's exactly what Boston Properties offers. They have a Class A portfolio. This means the highest quality properties with the best amenities and great capital expenditures that they pour back into their properties. In addition to having a Class A portfolio, BXP is the largest publicly held developer and owner of superb properties within the United States, with property operations within 6 major markets, including Boston, Los Angeles, New York, San Francisco, Seattle, Washington, D.C. Over the past 12 months, shares of BXP have been beaten down more than 35%, but shares are up a little in 2023. BXP currently maintains a portfolio of roughly 200 properties made up of over 50 million square feet. The company recently issued their Q4 and full year 2022 earnings, as well as their 2023 guidance. Revenues generated during the quarter were nearly $790 million, up 8% year over year, with funds from operations, or FFO, of $292.9 million, or $1.86 per diluted share, which was a 20% increase year over year. Management is looking for 2023 FFO to come in between $7.08 per share to $7.18 per share, which was roughly 9 cents lower, looking at the midpoint, than the company's previous guidance. During the quarter, the company executed roughly 1.1 million square feet of leases, having a weighted average lease term of nearly 8 years. Occupancy during the quarter on an adjusted basis increased 20 basis points to 89.1%. Shares of Boston Properties currently pay an annual dividend of $3.92 per share, which equates to a high dividend yield of 5.4%. If one is willing to ride out the office volatility, as the data does point to more employees returning to physical office locations, then there is not much better in terms of quality than BXP. Shares of BXP currently trade at 14.4 2023 AFFO estimates, which is well below the company's historical 5-year average of 25.8 times. The second high-yield dividend stock we're going to look at today is British American Tobacco, stock ticker BTI. British American Tobacco is one of the largest tobacco companies in the world, and they have competitors that you may be very well familiar with in Philip Morris as well as Altria, two also high-yield dividend stocks to consider. BTI recently announced their Q4 and full year 2022 earnings, which saw the company generate an increase in revenues of 2.3% on a constant currency basis. Europe is especially doing well for British American Tobacco, and it is less about cigarettes and more about their alternative products. New categories saw 37% revenue growth during the year. And these new categories, which include heated products, nicotine pouches, and vape products to name a few, these new categories now make up 10% of the company's revenue share. The company has done a nice job diversifying itself away from traditional tobacco products, and that has paid off, evidenced by rising cash flows. BTI reported $9.7 billion in free cash flow during the year, showing a 7% year-over-year increase. The growth in free cash flow has been driven by a number of things, including cost savings and volume gains, especially when it comes to these alternative products. Their rising cash flows help support a high dividend yield of 7.2%. In terms of valuation, shares of BTI traded a forward earnings multiple of 7.9 times, which is below their 5-year historical average of 8.5 times. The third high-yield dividend stock on our list today is Verizon Communications, stock ticker VZ. Many of you are very familiar with Verizon as they are one of the 3 largest carriers here in the US, with competition from the likes of AT&T as well as T-Mobile. On the year, shares of Verizon have been hammered as they are down roughly 25% over the past 12 months. Some of the big problems that Verizon has been running into has been stiff competition from the likes of AT&T and T-Mobile, and also the rollout of 5G. Both are problems, but stiff competition has led to large discounts on new phones just to acquire new or keep current customers, which have a negative impact on margin. Verizon for years laid claim to having the best coverage, but with 5G now rolling out more, they have lost that lead and have been spending aggressively to keep up. The company recently reported their Q4 and full year 2022 earnings, which saw adjusted EPS of $5.18 per share, and operating expenses surged 6% in Q4 alone to $28 billion, evidenced by the 5G spending that the company is having to shell out. They also laid out their 2023 guidance, which showed 2.5% to 4.5% wireless service revenue growth, as the company as a whole is looking for just 2% revenue growth. Adjusted EBITDA is expected around $47.5 billion, and adjusted EPS, we just saw the full year 2022 come in at $5.18. For 2023, the company is looking for that to dip between $4.55 per share to $4.85 per share. CapEx spending on the year is expected to be between $18.25 billion and $19.25 billion. Due to this 5G rollout and having to keep up with competition and continue to spread out their wireless coverage, the company is continuing to have to raise their capital expenditures. And this has had a negative effect, as we are seeing here in 2023. The other area this negatively impacts is free cash flow. And as you know, with dividend stocks, free cash flow is imperative, as this is where the dividend is paid from. Verizon last year paid out $10.8 billion in dividends and earned $14.1 billion in free cash flow. That is a free cash flow payout ratio of 77%, which is pretty high. Not that great, but not horrible. Capital expenditure and free cash flow will be a major focus for investors in 2023. Speaking of the dividend, Verizon has paid a dividend since 1984, nearly 40 years, and they have increased their dividend for the past 16 consecutive years now. The company currently pays an annual dividend of $2.61 per share, which equates to a high dividend yield of 6.5%. In terms of valuation, the company has been hammered, so the valuation looks quite intriguing at these levels. As it stands right now, shares of Verizon trade at 8.5 times 2023 earnings compared to a 5-year average of 11.2 times. So a considerable discount you are getting right now. So all three of these companies are facing tough headwinds, but they're all quality companies and they pay great dividends for those looking for high yield dividends. Office properties probably aren't the greatest space to be in right now, but Boston Properties is one of the highest quality office landlords you can find, and they have properties in 6 of the major markets found here in the US. British American Tobacco is faced with competition from the likes of Altria Group as well as Philip Morris. But as we have seen, their alternative group of products is doing quite well. And then lastly, we look at Verizon, which is facing stiff competition from the likes of AT&T and T-Mobile, and they're having to keep up with the 5G rollout, which has impacted their capital expenditures and their free cash flow. All three stocks, high dividend yields, lower growth, but great valuations right now. Down in the comments section, let me know which of these 3 stocks, if any, you prefer. And also, if you haven't done so yet, hit that like button down below, as that is greatly appreciated, and we'll see you in the next video. Take care.